The release of Chinese-backed AI chatbot DeepSeek is sparking some concerns about U.S. AI dominance and big tech's capex spending. The model is open source, seemingly performs as well as other popular chatbots for a fraction of the cost. Now, DeepSeek's founder started the company just back in 2023 with just $1.4 million in capital. Well, meanwhile, the U.S. announcing a $500 billion AI project, Stargate, and Mark Zuckerberg saying that Meta is going to spend up to $65 billion this year alone on AI investments. For more on what this ultimately means for the AI landscape, we want to bring in Sarah Krebs, the director of Cornell's Tech Policy Institute. Sarah, it's great to talk to you here. So I'm curious, how are you looking at the developments and the headlines that certainly were front and center over the weekend, and whether or not this does, in fact, put into question AI's big cap or large cap tech dominance when it comes to AI spending?
I mean, the story over the weekend about DeepSeek really was juxtaposed against last week's big announcements about how much Meta was going to invest in AI and Stargate up to 500 billion. And so it was so interesting to follow that at 5% or a fraction of what these big tech companies are spending, it looks like this small Chinese startup is able to perform in many of the same ways as you know, these American pioneers. I mean, it's an apples to oranges. I don't think it's a one-to-one. It depends on the use case. It seems like it's really good at some tasks, not as good as others. But it is easy to follow. The U.S. Big tech firms have really led in this space, and that takes a lot of capital. It takes a lot of resources. Easier to come along later and try to replicate this at a fraction of the cost.
Sarah, you mentioned that $500 billion Stargate project. How much more pressure does this put on Stargate to really deliver on its promises?
I think it puts enormous pressure on the U.S. AI firms to show that the amount that they're spending is delivering value for people. And I think in that sense, actually, competition, I think like your last guest was saying, probably is going to be a good thing for these companies. It will raise the bar for what consumers and businesses are expecting to get for free, first of all, and in turn, what companies like AI can charge. So I think there will be some really big ripple effects, both politically and financially, even if this alternative isn't a one-for-one.
So could it end up being a long-term benefit, not only for others across sectors, but even for those within the industry?
I think that's right. In the short term, obviously, there are I think adverse effects, because it will kind of raise this question of, well, what's the value proposition for your $65 billion investment if we can get, you know, a pretty decent product for a fraction of the price. But I think we've seen this in other markets as well, whether it's the auto industry. You know, German manufacturers are having a real problem because the Chinese alternatives are pretty good. They're not like buying a Porsche, but not everyone needs a Porsche. Or in the drone market, the Chinese civilian drones are something like 70% of the civilian market. They're not as good as the American versions. So I think what we'll just see is kind of a bifurcation within the market, and not every company can afford, you know, OpenAI's service. They might prefer these alternatives that are a fraction of the price.